Right now, as you watch this, trillions of dollars are moving through an economy that doesn't appear in any government spreadsheet, any GDP report, or any official ledger. It's larger than the United States economy. It employs more people than China. And almost nobody talks about it. Every economy has two layers. The one you can see, GDP numbers, tax filings, stock tickers, and the one that runs beneath it. Economists call it the shadow economy, the underground economy, the informal economy. The names change. The concept doesn't. It's economic activity that happens entirely outside government measurement, regulation, or taxation. And before you picture drug cartels in a warehouse, understand this: most of it is completely legal. A street vendor in Lagos who never registers her business. A plumber in Manchester paid in cash, no invoice. A tech startup in Dublin routing its European profits through a Luxembourg holding company. A billionaire whose wealth sits in a foundation in Liechtenstein that technically owns nothing. All of it hidden. All of it real. The International Monetary Fund estimates the global shadow economy at approximately $10 trillion per year. $10 trillion. That's larger than every economy in Europe combined. It's larger than the GDP of every country in Africa, South America, and the Middle East combined. In developing nations, the informal economy can represent 60% of all economic activity. In the United States alone, the IRS estimates a tax gap, the difference between taxes owed and taxes actually collected, of over $600 billion annually. Every single year. This isn't a rounding error. This is a parallel financial system, operating at planetary scale. And it has been for decades. The oldest pillar, cash. In South Asia, Sub-Saharan Africa, and Latin America, cash transactions dominate daily commerce. No digital trace, no receipt, no record. Even in advanced economies, construction, agriculture, hospitality, cash remains the preferred instrument for keeping money invisible. Economists estimate that in the US alone, unreported cash income costs the Treasury over $100 billion annually. Over 2 billion people globally work in the informal sector. More than half the world's workforce, running businesses, earning income, paying nothing to the state. Not because they're criminals, because in many cases, the formal system was never designed to include them. The Cayman Islands, population 70,000. Registered companies, over 100,000. More businesses than residents. The British Virgin Islands, Bermuda, Luxembourg. These jurisdictions offer one product above everything else: legally sanctioned invisibility. Multinationals use a technique called transfer pricing, charging inflated fees between their own subsidiaries to move profits into zero-tax territories. It's engineered, it's deliberate, and it costs governments an estimated $500 billion annually in lost corporate tax revenue. Every year, perfectly legal. Counterfeiting is a $500 billion industry. Fake pharmaceuticals, pirated software, replica luxury goods flooding markets from Guangzhou to New York. The OECD estimates counterfeit and pirated products represent nearly 2.5% of all global trade, moving through legitimate shipping channels, clearing real ports, ending up on real shelves. Then the darker layer. The United Nations estimates the global drug trade alone generates $500 billion per year. Add human trafficking, cybercrime, ransomware attacks, and organized crime exceeds $1 trillion annually. This money doesn't sit in a warehouse, it gets laundered, moved through real estate, luxury goods, shell companies, and cryptocurrency, until it surfaces clean on the other side, indistinguishable from legitimate capital. And at the very apex of this system, offshore wealth. Tax economist Gabriel Zuckman estimates that roughly $8 trillion in private wealth is held in offshore accounts, deliberately positioned beyond the reach of domestic tax authorities. The Panama Papers, the Pandora Papers, the Swiss leaks. Each investigation pulled back the curtain and revealed the same truth:
that the ultra-wealthy operate by a fundamentally different set of rules.
So why can't governments stop it? 3 reasons. Jurisdiction, complexity, incentive. Jurisdiction, money crosses borders in milliseconds. Investigations take years and require international cooperation that rarely materializes in any meaningful form. Complexity, the instruments used to hide capital, special purpose vehicles, nominee directors, layered trusts, synthetic derivatives, are engineered specifically to resist examination. By design. And incentive, the jurisdictions that profit most from hosting offshore capital have zero motivation to dismantle the system that funds their economies. Meaningful reform requires unanimous global coordination. The world has never achieved that, not once. Here's what should actually sit with you. The hidden economy isn't a flaw in the system. In many ways, it is the system. Built incrementally, over decades, by lawyers and accountants and legislators, each acting in their own rational self-interest. The fruit vendor hiding income because she cannot navigate the paperwork. The hedge fund manager routing profits through 6 jurisdictions because his lawyers advised him to. They are playing the same game, at very different stakes. $10 trillion, hidden, every year. The question isn't whether this system exists. The question is, who is it working for? If this changed how you see the global economy, subscribe. The hidden economy covers the financial systems most channels won't touch. New documentary every week.